Hello, everyone, and welcome to another edition of the Smart Investor Market Update, where smart investors get their up to date price analysis and market information. In this episode, we are going to speak about economics and the markets, and should we be basing our buy and sell stock decisions on our economic outlook. We're going to take a detailed look at that. We're also going to look at the price action in the markets. We see that last week the market ended on a all-time closing high, where the S&P 500, the Nasdaq, and the Dow was doing very well, or did very well last week, even shrugging off those are the negative economic numbers. We're also going to take a look at some individual stock plays. We're going to look and see what Tesla is doing today. We're going to look at what Apple is doing. So we have quite a number of things we're going to speak about. But on to our main topic, and just to give you an update on the markets, as of this recording, the S&P 500 is down 1.76 points at 25.47. The Dow is down 22.768, and the Nasdaq is down 0.98%. So not really much going on today. Crude oil is up 39 cents, gold is up $10, and silver is up 17 cents. Okay, so that's what's happening in the market. What we're seeing is that investors are not really committing to any great positions today. The market action is fairly anemic, and as you can see, that we are touching up on new highs. So there's no overhead resistance per se in this market. The short-term resistance is at the 25.50 region, where the market closed where the market surged to last week. So economics and the markets, and the story normally goes this way. Investor A may have an outlook on what will happen with the economy. So, for example, there may be an inflation outlook, and this is just really an example. Investor A thinks that there will be rapid inflation in the next couple of years, and he bases that on a number of factors, maybe the record purchases of the Fed, maybe the fact that there's a lot of money out there in supply in the market, maybe the fact that he's seeing food going up all over him. Whatever is a reason. And the outlook, his particular outlook for the economy is expansion, and we will get some inflation. Knowing that view, the investor then will go out and buy a particular asset. For example, buy gold or buy silver based on that view. And that I'm going to say is a definite method to lose money in the markets. And why do I say that? Because even though you may have an economic view or economic outlook of what may happen in the markets may not particularly follow or respond as soon as you may think, and when you may think. Because remember, investing is all about timing, buying and selling, knowing when to buy at the correct time, when to sell at the correct time. And this was an argument I heard back in 2011 especially, and it was an argument with gold about the inflation trade. The argument was that gold, the same inflation argument, and gold was going to skyrocket. And folks gave this argument in 2011, 2012 on the pullback in gold. And what we saw was you remember 2011, 2012, there was record purchases by the Fed. Folks were really anticipating record levels of inflation. Thinking was that the dollar would sink and gold would rise even further. Well, what happened in 2011 was the fact that gold actually topped out near the 1900 level. Now, most folks interpreted this pullback as a long-term pullback or a good entry point. And I know a lot of investors thought this was a good entry point to enter the market. And the market collapsed down and entered a series of lower lows, lower highs ever since then. And we saw a decline in gold up to 2016. So the anyone who invested money based on that economic argument bought gold at the 1600, 1700, 1800, even up to $1900 level, lost money over the next couple of years. In fact, gold dropped all the way down to 1100. I believe it bottomed at 1095, or just about $1,000. So we saw a 40% drop in the value of gold, even though folks were putting on the inflation trade. Folks interpreted the fact that the economy is inflationary, or we'll see high levels of inflation until let me just automatically buy the markets. And for those of you who are listening to this podcast, you can get a video of this show at smartinvestorcentral.com. A video is posted on the website. Okay, so folks lost money with that scenario, and the reason why they lost money is that just because you have an economic outlook of something, that does not necessarily mean the market will go down at that particular time. Similar situation happened in 2008 with the stock market. We saw folks in as early as 2005 saying that the market would collapse. 2004, 2005, people were saying that the market would collapse, and they were short in the S&P 500, and they gave good examples of what the bubble that the markets, or the problem with the mortgage crisis. Folks outlined the problem perfectly and were advising. I remember going to various conferences, just listening to speakers. They were advising that stocks will collapse any minute now. And the market rallied in 2003, 2004, 2005, 2006, 2007, and eventually topped out in late 2007. So even though the prediction was that we're on a bubble, the market still rallied from 1100 on S&P 500 to roughly 1600. Again, their argument for the economy was probably right, but the timing of it was wrong, and you have to be very careful anytime you have an economic view, and push your economic view to make purchases in the markets. Just something that I see a lot of investors doing, and it can be detrimental to a portfolio. So just like, and it goes to what's happening today. Folks are saying that we are in a bubble situation again. The stock market is in a bubble. The Fed has really pumped up the markets and pushing money in, and it's going to collapse. Well, that may be true. The markets may collapse. The markets may go down. But at this point in time, the market is going up. So even though the economic view that you may have can be correct, the market at this point in time is still trending upwards. Now, what to do? And what to do instead of having an economic view, or basing your buy and sell decisions on an economic view, is the solution is to follow a market-led approach. The solution is to let the markets respond to your view before you take some action, and that is something that is vitally important. If you can if you can let the market lead. So for example, if you are saying that the stock market will collapse at this point in time, we're currently at 2,500 in the S&P 500. If you are saying that the stock market will collapse from now, let the market turn down first. Let the trend, let it break this uptrend that we're having, break the uptrend, and then start to trend to the downside. So let the market lead you, and that's why I call it a more of a market-led approach. So let the market confirm your view of whatever is happening first before jumping on the bandwagon. And if you do that, you'll find that you will have a much better chance of making money on your particular economic view. Let the market show you first. And that's why it's important for every investor to be able to look at a basic price chart. You don't have to be skilled in technical analysis. You just have to be able to look at a price chart. And just looking at this S&P 500 chart now, you see that this is in an uptrend. It's in a clear uptrend. Do I advise people to buy stocks at this point in time? Maybe not. But what you can do is at least follow the flow of the market and let the market continue. Let the market continue to lead you to the upside. Tighten your stops under the markets and let your profits run if you are holding stocks. Okay, looking in some more detail of the market components, let's take a look at what's happening over there in Europe, because we were very close to an all-time high in the German DAX, and what we saw last week is the market actually closed at the highest level it has ever had for the German DAX. So we had a record close in the German DAX at 12,955, just shy of 13,000. Looking at the longer term chart, we see that this market, the DAX, is at an all-time high. Looking at the FTSE in London, we see that the market didn't close at an all-time high, but was very close to the all-time high, near that 7,600 level. So we're seeing markets across the board rally. We're seeing markets across the board look positive, and the trend is up. That does not mean the trend cannot change. The trend can change, and that's why I advocate you having an exit plan for your portfolio. It's not a good investing practice to have the markets at all-time highs, and then let's say we get a collapse in the market drops 50%, and you're still holding the exact same positions. That means you really didn't make any money. So always have an exit plan in case the markets turn. Looking at the US dollar index, we see that the US dollar found support at that 91 level. I've been speaking about that level over the last couple of weeks, and the importance of that level. And we saw that the US dollar index bounced from that level. And just of note, the longer term or the outlook from 2008 or so is for a positive dollar, and that's one of the reasons, again, why that inflation trade that folks were trying to put on just did not materialize, because we have a rally in dollar. Ever since 2008, we have seen a steady rally in the dollar. The dollar is finding support now at that 91 level, and we could see, if it holds, and it holds long term, we could see the dollar make another stab to the upside. So we're going to keep an eye on that. Looking at the gold market, and just because I gave an example about gold knowing when to buy and sell gold, I firmly believe now, and the signs are there, that gold has broken its longer term downtrend. Uh, as you can see, lower lows, lower highs. This trend of lower lows, lower highs was broken. Market broke up in 2016, came down, and is trending to the upside. So that's why I'm positive of gold. Again, let the market. It's a typical market-led approach. We let the market lead us before we then jump aboard this trend. I think a lot of times folks are trying to catch the very bottom of a move or the very top of a move, and money is made in the middle. So this gold example is a perfect example of letting the market lead you up. We see the market break that series of lower lows, lower highs on a chart, break it, and is now looking like it wants to move to the upside in gold. So at this point in time, I am fairly bullish gold. Can that viewpoint change? Yes. If we start to see the market break this series of uptrending pulses and it starts to turn down, then I will be changing my view on gold. But now I believe that we have seen a long-term bottom in gold, and we could see higher prices in the future. And just like how in 2009, 2008, nobody wanted to invest in stocks because they saw it going down for a number of months. It's a similar situation I see now with gold. No one really wants to get aboard now because of the negative experience over the last 4 years or so. But now is the time when the market has showed us that it can move upward. Now is the time looking like gold can be promising. Looking at the crude oil market, we see that oil is in a trading range. It's not in any form of trend. We are seeing choppy price action between the 40 and the 55 dollar region. So nothing much is really happening in oil. I would say the current bias is slightly to the upside, but there's no discernible trend here in crude oil. Okay, taking a look at some stock positions, and we saw some analysts came out and spoke about Apple and what's happening in Apple. Now, analysts may come out and say something about a particular stock, and it's the same principle will apply. Just because I like a stock or just because I believe the stock will come out with good earnings or have better sales, that doesn't mean I'll go out and buy the stock tomorrow morning. You first have to look at the chart. So we're bringing up Apple. For those of you listening, again, you can go to smartinvestorcentral.com and see the video broadcast. We see Apple is in a steady uptrend, lower highs, lower lows. So that's one of the first things we want to look at to see if this is a buy. And we see the market trending to the upside. So this is a stock that looks promising. Looking at Tesla. What's the symbol here for Tesla? Tesla makes these electronic cars. No, I don't have one myself. We see that the Tesla, and there are a lot of folks who have been beating down Tesla. They're saying they are a company that not making any money, that the electronic car market is we have some new players coming in from China, and it will drive down the prices of electronic cars, etc. But what is the market telling us? This market is telling us that we are in a uptrend, in a strong uptrend. So I would be a holder of Tesla at this point in time with a stop loss, a reasonable stop loss under that 320, 300 level. So even though the market is in an uptrend, you always have to have your exit strategy. That's how you become a smart investor. And if you are not a smart investor in this world, you are going to lose money in the markets, and you are going to greatly underperform what the market is doing. So Tesla at this point in time is, I would consider, a classic hold. this is a hold. Now, Netflix did come out with some earnings, I believe. I'm not sure what the earnings were, but the market soared and made another new high last week and closed at a new high last week. So Netflix is looking positive. Also, there are folks that have been speaking about the fact that online piracy of movies, etc., will kill Netflix. But again, what is the market telling us? The market is telling us that we are in a fairly strong uptrend. So this is a hold. And that's why it's important, again, to look at price charts, look at what the market is doing in a particular stock or a particular market. And that way, no one can sell you a bag of potatoes or a bag of bad stocks or stocks that will not do well. Okay, so essentially that is it, what we have here for the Smart Investor Market Show. I hope you enjoyed it. If you have any questions, please feel free to send me an email at info@smartinvestorcentral.com. If you would like to, if you are watching this on YouTube, you can subscribe to the channel. If you are listening to the podcast, please subscribe and like the podcast. We aim to bring you up-to-date price analysis and market information that you won't hear on CNBC or anywhere else. We are looking at profitable market moves that we believe will turn out well for you, the investor. And the show is not based on a bunch of economic mumbo jumbo theories. We're looking what the market is doing, because if you follow what the market is doing, that is how long-term profits are made. Thank you very much for listening, and I hope you all have a wonderful day.